Hello there, Jocks. This is section 3 of our 1 hour opening range trading strategy. So we'll pick up where we left off at this bar here. Now, something I forgot to mention, and the reason why it's called the opening range is because the high and the low, this is the range. So when we look at our trend lines we've drawn here, this open area in here, this is the range, and this is where we want to stay away from when we're trading, because the market it has not made a decision on which way it really wants to go for the day until we have a breakout of the opening range. So for instance, in this example here, although this bar closed still above the opening range, now this bar closed within the opening range. Now, but we don't want to go short here. But if we did want to go short, we would, because this is a bear pivot also. And remember when I said about how our other rules do apply to the opening range, but when we fit them into the context of the opening range, it most of the times will keep us on the right side of the market for that particular day. And now I've drawn the lines at the high and the low, but most of the time price will react and respect the real bodies, and just the same way it does in most setups. But price more or less will respect if it's an up bar, will more or less respect the open of the bar and the close of the bar. But now we can see now when this bar closed, we're still in the opening range. Now me personally, since the trend is down and this is a pivot, although this bar occurred within the opening range, I would place an entry order to sell short at the pivot point here, and instead of placing my stop above the swing bar, above the high of this swing bar here, I would place my stop above the high of this bar, or the high of the opening range, because the opening range usually functions quite well as support and resistance. But now we see we had a long entry here, but now if we follow our normal rules of footsteps, okay, now when we get to this bar here, we see that red closed below green, and we know that red below green, a downfall is seen. And so on this bar, if we had entered on the opening range here at the real body on one of these two bars here, this bar here would be our normal our normal exit the signal, because now once we have a red close below green, this green bar becomes a resistance on the way back up from the close of this bar. So now in this particular situation, once red closed below green, it closed below green within the 1 hour opening range, and the resistance green bar is right around the opening range. And if we had entered here and this bar appeared, well, of course that tells us to exit our long, and we exit our long here and we're about at break even. Okay, so a very low risk proposition. But now let's just say we're not trading pivots or applying any our pivot rules to this opening range, and we're just strictly playing opening range. Well, once this bar here, once we can see barely, but it did close below the low of the opening range, and this is definitely a short signal. Now once you see this close below the low of the opening range, you want to place a sell short order. You want to go short right at the low of the opening range here, and your stop would go above the opening range, the high of the opening range. And in this particular example, we see here that we get our close below the opening range, and the very next bar takes a nice little dive down. And when we look at this bar here, when we look at the pullback up, where did price stop? It stopped at the low, or approximately the low of the opening range. Now if you're in the trade, if you get in here and when price pulls back here and it closed above the opening range, okay, then it's time to get out. If you're in trade and a bar closes within the range, and then that means it's time to get out. Now although when we look here we see the very next bar took price back down, but just to be on the safe side, we don't want to hold on and see if our stop is hit once we get a close back within the opening range, because once we get a close back, wow, I really hate this condition I have right now, jocks, but it can't be helped. And so because once we have a close back within the opening range, well, the low of the open range becomes support again until we have another close outside. But if we're not being too greedy, and we're actually, if we're following our rules, and we would have been out, or should have been out, at the close of this bar, I'm sorry, the close of this bar, because it's an up bar on a lower volume. But just in case we hadn't gotten out here, then we definitely want to get out on a close above here. And that ends my time for this section of the 1 hour opening range, and I'll see you in section 3, jocks, and we'll discuss the 1 hour opening range a little further.